Hey guys, what's going on? It's Travis here with JT Wealth, and in today's video we're going to talk about the fantastic green day we all saw in the market today, as well as how we can capitalize on this momentum going forward. So let's get into it. Alright, so right off the bat, let's just apologize for me not being Julie. I know what you're used to seeing. This isn't it. So I apologize there, but I'm stepping in for Julie tonight and hopefully I can give you guys some solid content. So let's take a look at what we're going to cover in today's video. So in today's video, we're going to focus on the green day we saw in the market. We're also going to look at a tech stock rebound that really contributed to that green day, what you should do next, the third stimulus and its potential impacts on the market, and highlight that you didn't lose quite as much as this guy. Now, I also wanted to point out, why do we show news articles? Why do we talk about analysts? And I feel like this is important to point out for you guys. The information you receive is only as good as the source, and you want professionals providing that information, not just some guy or girl on YouTube. So that's why we feel it's so important to give you guys professional opinions from people who do this for a living, instead of just giving you our opinions. Alright guys, so if you liked today's video, please remember, give me a thumbs up, leave a comment in the comment section down below, and also please don't forget to check out Julie's video tomorrow morning and every morning, Monday through Friday, on the TipRanks channel pre-market. Also, if you're in the market for a new account, please check out our Webull link down below where you can get 2 free stocks for opening and funding a new investment account. Now that all that stuff is out of the way, let's talk about the stock market today and the green day we saw. Alright, so let's start with the S&P 500. Today we saw a 1.42% gain on the day, bringing the S&P to 3875.44 as of 4:20 p.m. Eastern Standard Time. So that was fantastic to finally see a green day. But something I want to point out is that even after that little dip we saw in the last couple of weeks that had everybody panicking, this is the 6-month chart of the same S&P 500. That is still a fairly strong upward trajectory from what we were looking at back in November timeframe. Another example today, guys, the NASDAQ 13,073.82, up 3.69%. And again, that same 6-month trajectory, we're looking at a strong growth trend, okay? So yeah, we had that 2-3 week strong dip, but we're still doing pretty well. Now, I didn't include images for the Dow Jones, but they did have a green day as well. It was just a very, very slight green day, so not quite as exciting as the S&P or the NASDAQ. Next, I want to highlight an article by Emily McCormick where she talks about the NASDAQ having its best day since early November. Emily says, the NASDAQ gained 3.7% for its best day since November. The move marked a stark reversal after the index sank into a correction by the close of Monday's session, plunging a total of more than 10% from recent record closing highs. Shares of Tesla jumped nearly 20%, paring much of its year-to-date loss after dropping over the last couple of weeks. And Apple shares also rebounded since hitting the lowest level since November earlier this week. The Dow, meanwhile, added to gains after rallying to an all-time intraday high on Monday. She points out that a lot of the drop in the NASDAQ over the last couple of weeks is a result of people shying away from tech stocks and pushing their money more into value and cyclical stocks. She believes that the shift to the value and cyclical stocks is based on their close ties to a strong economic recovery. And as the government prepares to release its third stimulus package, the prospects of a strong economic recovery grow. This can be seen also in the bond yields rising. She believed that those factors combined all led investors away from the growth in tech stocks. More specifically, tech stocks, who saw a massive boom in the last year during the work from home pump. It's important to note that that trend towards value and cyclical stocks tends to happen at the end of a recession. As you get out of that recession, people look to the small cap stocks, things like energy, for their value. And this shift recently may have been exacerbated by some of the extremely high prices of a lot of the tech stocks. She writes, I don't think these companies are going away. I think a lot of these are going to be things that we continue to have in our workplaces going forward. But the question is, are these companies so expensive? Is all the optimism already priced in? And that's different than these companies continuing to be a main forefront of how we work going forward. But is today's tech stock rebound indicative of consumer confidence in that arena? For example, at 1:11 today Eastern Time, the NASDAQ extended its jump to 4%, pacing towards its best day in nearly a year as a result of the tech shares. Moving forward to 4:03 p.m. Eastern Time, the NASDAQ had completed the day at 3.7% for the best day since November as a technology share recovered its losses. The S&P was up, the Dow was up, NASDAQ, as we discussed, Crude was down slightly, gold was up, and the 10-year Treasury note was down just a little bit. So now let's look at what the expectations are for these big tech stocks like FAANG. And of course, when I say FAANG, I mean Facebook, Amazon, Apple, Netflix, and Google. In this article, MarketWatch says in these uncertain times, the FAANG stocks are expected to rise as much as 35% over the next year. The author, Philip Van Dorn, says it may be time to start loading up on FAANG stocks again if you buy the arguments that the interest rate jitters the past few weeks are set to pause and more federal stimulus will increase the prospects for larger companies. On March 8th, David Tepper, the founder of Appaloosa Management, whose predictions are closely watched by Wall Street, went on to say that the expected $1.9 trillion government stimulus would be a near-term catalyst for stocks. Tepper pointed to Amazon stock as being especially attractive during this time. To highlight some of the tech stock trends we've been seeing lately, we're going to look at the FAANG stocks plus Microsoft from the period of February 12th through March 5th. Now, as you can see in the chart, Facebook was down 2.3%, Apple 10.3%, having the largest decline, Amazon 8.5%, Netflix 7.2%, Google just down slightly at 0.2%, and Microsoft Corp was down 5.5%. But when we look at the sales growth estimates for 2020 through 2022, you still see strong growth estimates for all of these stocks. 2021, Facebook, 25%, 2022, 20%. Apple, 16% in 2021, going down to 4% as of 2022. So that's the largest decline that we've seen in sales growth estimates for these stocks. So during the Rona year of 2020, Amazon saw the best sales growth by far. But for both 2021 and 2022, Facebook is poised to have the strongest revenue growth of all the FAANG stocks. All 6 of those companies are expected to increase sales by double digits during 2021. Despite the massive growth these stocks have seen in the past, they're still highly recommended by most financial analysts. These stocks are viewed as foundational stocks in anybody's portfolio with a lot of future growth potential. So in this chart, you can see the buy ratings, the neutral ratings, and the sell ratings for all of these FAANG stocks, again, plus Microsoft. So 86% are still giving a buy rating for Facebook, 69% for Apple, 96% for Amazon, 68% for Netflix, 93% for Google, and 94% for Microsoft. So the analysts obviously favor all 6 of these stocks, with the highest buy ratings going to Amazon. Okay, so now let's talk about the likelihood of this stimulus check coming out and how that's going to affect the market going forward. In this Yahoo Finance article by Brian Sozzi, it says the $1.9 trillion Rona relief bill may unleash households on the stock market.
Unleash households on the stock market? What does that mean, Travis?
I'm glad you asked, Julie. Goldman Sachs analysts are saying there's a strong likelihood that a good portion of the stimulus money going to the American households is going to find its way into the stock market. We expect households will be the largest source of equity demand this year, says Goldman's chief U.S. equity strategist David Kostin. We raise our household net equity demand forecast to $350 billion from $100 billion, which reflects faster economic growth and higher interest rates than we had assumed previously, additional stimulus payments to individuals, and increased retail activity in early 2021. Fueling Goldman's optimism is equity fund flows. Despite the yawning bearish sentiment in markets of late, that surprisingly hasn't stopped inflows into mutual funds and ETFs. Equity mutual fund and ETF inflows have totaled $163 billion since the start of February, according to the Goldman's research. That marks the largest 5-week inflow on record in absolute dollar terms, and the 3rd largest in a decade relative to assets. So maybe some people are actually listening and buying the dip, but it appears you're buying the dip in mutual funds and ETFs, which is okay. Now, the 3rd stimulus package was so close to being voted on today, but it was extended into tomorrow. So now let's take a look at exactly how those payments are going to break out by household. The Senate bill directs the $1,400 direct payments to individuals earning up to $75,000, but cuts off eligibility for single people earning more than $80,000. For couples who file a joint federal income tax return, the phase-out begins at those making $150,000, ending at $160,000. And for those of you filing as head of household, you will receive the full $1,400 payment if you earn less than $112,500, while those payments will be cut off for those earning more than $120,000. So if you find yourself in any of those categories and anticipate getting the stimulus relief money, congratulations. I hope you do something fantastic with it, and hopefully you'll be able to invest some of it, as that's the expectation for a lot of American families, is they're going to save and invest some of that money. Which, let's face it, probably means there's a large chunk of people who maybe don't need the stimulus, but we're not going to get into that here. All right, now everybody has been talking about the last couple of weeks and how much money they've lost. We've heard so many stories about people who are down on their accounts and who are upset with the market. There hasn't been as much attention on the market as of late as a result of that, but I wanted to bring you guys something to kind of brighten your day, and let's talk about somebody who lost a lot more money than you did. There it is, guys. Quick and to the point with the Tesla stock decline, not including today, of course. Elon Musk had lost $27 billion in a single week. So I don't know, maybe that makes you feel better. But we should point out now, that's not a loss out of his pocket, right? That's not cash that he lost. That was the loss of the value of the shares of his company, which after today, like we saw, went back up, right? So like we say, you don't ever lose money unless you sell. So don't realize those losses by selling on the dips. Hold and wait for those stocks to grow again. All right, guys, so that pretty much sums it up. We talked about the green day in the market, the tech stock rebound, what to do with your money now. That was the portion where we talked about FAANG and how you should really have them as a backbone of your portfolio, right? Then we briefly covered the third stimulus check and who lost a lot more money than you did. All right, but keep in mind, guys, these videos are never a recommendation or a suggestion to buy any specific stock. None of the stocks we mentioned today are ones I'm personally recommending to you, and even if I did, who cares, right? I'm not a professional, I'm not a financial analyst, I am not in a position to give you stock advice. So make sure you guys are all doing your own research into these stocks, your own due diligence before you go and invest your hard-earned money into these stocks. All right, guys, I'll end by just apologizing again for not being Julie and saying you have no idea how long this video took for me to film. This is much harder than it looks from being on the other side of the camera and kind of laughing at Julie all these months. I'm seeing what she goes through. So thanks for sticking with me and bearing through my poor performance here this evening. Again, guys, be on the lookout for Julie's video tomorrow morning on TipRanks, and then another video tomorrow in the evening on JT Wealth, where you'll get to see Julie again. Thanks so much for watching, guys. Have a good day. Bottoms up.